Legal disclaimer: do not make this trade. Seriously, don't. This video is for educational purposes only and placed by a professional trader from Maverick Trading. Maverick Trading is sponsoring this trading experiment with a $100,000 trading account. To trade for Maverick Trading, you can submit an application for stock, option trader, or currency trader from the link in the video description below.
Happy Tuesday, this is Rob. Here we are at trade number 43. Now, trade number 43, we're going to follow the same script we followed for the other 42 trades. Our premise is that biggest conspiracy theory in trading is that everyone puts all of their effort on the entry and very little on the exit. What we're doing here, we're saying, look, the entry doesn't matter, the exit is more important, and if you manage exits properly by selling losers and holding winners, that you can make a profit in the end. So, what are we going to do on trade 43? Well, today we got the CPI report about inflation. Inflation has cooled to 3.1%. Look, I know that's still high. I know we've all felt the bite of inflation, but let's make a trade based on inflation. Now, just quickly, let's go over what we got from the Fed here. We got 3.1% annual rate. Now, look, that's still higher than trend. That's still higher than the Fed wants, but this is way better than where we were 2 years ago at 8%. Remember where inflation was transitory, they told us? Well, it hasn't been so transitory, but it's no longer raging. A 3.1% annual rate is a rate the Fed is quite comfortable with, which means that the inflation that we've all experienced is likely in the economy and will never come out. Sorry, if you're waiting for prices to go back down, that's probably not going to happen. Moderation is about all we can hope for. So I have built a wheel here with some common places that we've all felt inflation: food, gas, housing, healthcare, transportation, apparel. We're getting a little break on gas, not much of a break on food, and housing. Housing, that's the tough one. I don't see any break anywhere. I have a daughter who is ready to buy a house and can no longer afford to buy a house. She could have 4 years ago, cannot today. Definitely not a great situation here. But let's go ahead and spin this wheel, and then what we're going to do is we're going to go into this industry group, and we're going to pick a stock, and that is the stock we're going to trade. Let's spin this wheel, the inflation wheel, and see what we get. As you can see, apparel is the winner. So I'm just going to go to FinViz, and I'm going to go to groups. I'm going to go down to my groups, and I'm going to go into consumer, cyclical, and then I'm going to go and see where is apparel? Where is the apparel group? Luxury goods, that's one of them. Apparel retail, that's the one that fits us the best. So apparel retail is what we're going to click on. And this brings up all of the stocks in this industry group. If you take a look over here, there are 35 total stocks. Well, we want to go ahead and make sure we get rid of all the ones we don't want, ones that don't trade enough volume, and ones that are under $10. And we want to make sure the price is over $10. Once we do that, we are left with 10 stocks here. So I'm going to sort these based on, let's just leave these sorted by alphabetical order. And let me go make a wheel from 1 to 10, and we will spin that wheel, and that is the trade we'll take. Here's our wheel from 1 to 10. Let's give that a spin. Whatever number this hits, we're going to go to that list, and we're going to pick the stock that's on the list. We have trade number 4. Let's go back to our list, and let's see what is trade number 4. Trade number 4 looks like it is Foot Locker, FL, Foot Locker. Let's go check that out on the chart. Let's go ahead and put in FL for Foot Locker. And you can see that Foot Locker had a really nice jump off of earnings, had another little rally after it, and you can see it's been down for about 5 out of the last 6 days. However, when we take a look at our EMA is sloping higher. So, based on our rules, we are going to be long Foot Locker. Current price is $27.81. $27.81 is the price, and the current ATR is $1.21. Let's build that ticket sheet out. It is December 12th, 2023. We are long Foot Locker. $27.81 was the price we were looking at. $1.21 is our ATR, so $2.42 will be 2x ATR, which means our initial stop will be at $25.39. Let's go put that into position sizing calculator and check our account balance. Going into our account to get account balance, go to account window, and we are at $100,166. Account value was $100,166. 1% risk. Entry price was $27.81. And our initial stop, 2x ATR, was $25.39. Let's go ahead and hit this compute button, and it tells us 413.9 shares. We're going to round that up to 414 shares. Let's go put that in. Let's come up here and put in Foot Locker. We're going to be long. 414 was the position size. We'll put our limit price slightly above the ask, just to give us some time to get this order in. I'm going to attach trailing stop order. And our trailing stop was 242. That was 2x ATR. Go ahead and hit submit. And that trade is in. So that trade is in. The ending price was $27.89.9. So $27.90 is the ending price. Let's adjust everything. The trade is 414 shares long of Foot Locker. And these are all of our numbers. We got all of our targets, and what do? Well, we already did the first one. Trailing stop at 2x ATR if we get to 2 ATR of profit. So if we make 242 of profit, we're going to move that trailing stop a little tighter. And if it keeps moving, we're going to move it a little tighter. And that's it. Those are our rules. It's either going to work for us or if it's going to work against us. We're going to treat them all the same, and we're not going to do anything. We're going to sit back and watch this go. Thanks for joining me. That's Trade 43. Goodbye.